Hi there and welcome to our latest edition of Money Talks, where we take a look at all aspects of the rural economy as it affects you in the ag sector. It's been another hectic week in the financial world, with news that Hungary could be heading the same way as Greece. But as international investors sit on the sidelines with a wait-and-see approach, the leaders of the G20 economies gear up to discuss global financial reforms at the end of the month. And of course, we have the anticipation of whether Alan Bollard will finally lift the official cash rate on Thursday. But first up, it's rural economist James Shortall from ASB. Hi, James.
Hello.
Now, looking at our currency over the last week, there's been a fair bit of movement, especially against the greenback. What's the impetus behind this?
It's all about what's happening offshore, because if we consider how New Zealand's going, then there's been very little change to our economy over the past few weeks. So all the directions coming from overseas. When we look here, then there's actually been some positive news with Fonterra's increasing the payout and some pretty stable results from their dairy trade auction. So, you know, when we consider what is happening with the currency, everything's coming from overseas. There's a bit of risk aversion out there. When we look at US Treasuries, then generally they sort of bottom out. Well, prior to the global financial crisis, then they were sort of bottomed out at around 4%, and right now they're down at 3.2%. So, you know, investors are pretty hungry to go to safe investments, what they perceive as being safe investments, and that's been driving the US dollar. So the US dollar's been strengthening against all currencies, you know, including the New Zealand.
Yeah, I was going to ask you, it's not just us.
No, it's everyone. It is
everyone,
and you know, it's going to continue until things really do settle overseas.
But despite all the volatility and uncertainty, there's not been much movement against the euro, I see.
Yeah, well, I guess all the action is in Europe at the moment, and that's why we haven't seen a lot of movement there, because that's where the uncertainty is coming from, and the euro is weak against all currencies, like against the New Zealand dollar. So, not anticipating that's going to change anytime soon, and we may continue to strengthen against the euro even further, because their economic woes are going to continue for a little while yet, and there's going to be a bit of a plague on their economy overall.
And against other major currencies, particularly the Aussie dollar, which we seem to be strengthening against.
Yeah, when we look what happened over the past few months, then we have ticked up a couple of cents against the Australian dollar, and probably likely to continue going that way. The big sort of movement while we did weaken was their economy was going pretty well, and their interest rates started increasing before ours did. But potentially on Thursday, then we might see an increase for the official cash rate, and that's going to probably attract investors here a little bit more. And the differential between their interest rates and New Zealand interest rates will close, and that'll mean that New Zealand dollar could tick up a little bit, and that's why we have seen the New Zealand dollar tick up so far.
Now, just looking at the global equities markets, there's been a slide there really with a number losing ground last week. What's behind this?
Yeah, when we look at what's happened over this first part of the year, I guess we're halfway through the year now.
Yeah.
The last few weeks have wiped out all the gains through 2010. So the uncertainty around Europe has really plagued equity markets, and that's been a key driver for the currency. And they've been on the slide. So there's a lot of things that are happening in Europe that are potentially going to be a drag on the global economy. When we look at some of the major countries around the world, even Germany, who are pretty strong, then you know, they've got budget deficits in the range of where New Zealand is this year. They're even looking at they've announced a big budget cuts recently, and even those strong countries, you know, that could have an effect on the European economy, and in turn that could affect US companies and their earnings results, and that uncertainty has been a worry for equity markets.
Yeah. So really investors will just be sitting on the sidelines and adopting a wait-and-see approach.
Yeah, well, they want to see how things pan out before jumping in, and
meantime, those markets continue to fall.
That's right. They're nervous overnight. They
are a very nervous lot, aren't they?
Definitely. They want certainty to put your money in places. So until we see that, then we're going to see things mixed.
Now, there was some big news out of the UK with their PM saying they're going to have to cut spending to control their mounting deficit, which is not an insignificant one. How will this impact on us over here? They're one of our major trading partners. How is this going to impact on our exports?
Two things. First being the currency. If they see if their economy sort of takes a bit of a downward stretch and potentially it could with big budget cuts, then the currency is going to be weak against all currencies, and that'll mean New Zealand dollar will continue to be strong against the pound, and that's going to impact on our exports and the prices that we receive back here in New Zealand. So that's probably the first point. The second point being it could potentially decrease demand from consumers in the UK if they're seeing government spending decrease. Potentially, perhaps high taxes, other reforms in the UK economy, then that's going to affect demand for our products, and specifically for lamb, because that's our major market. So there's a couple of factors that are going on there that need to be watched pretty closely.
Now, just turning our attention to the dairy sector, I think just before we came into record, actually, there was an announcement from Fonterra. Can you just tell us what that was all about?
The global dairy trade auction is going to be held twice monthly now.
Twice a month.
Yeah, so from September of this year, which I think is, it's become increasingly important for global dairy markets, and this is going to provide further price discovery for the market globally, and I think it's quite important in general terms. And they're also going to increase the number of products, so they're adding a few more products on there, which is generally going to be good and give a good market indication of where prices are and where they're going.
So really it's a move to bring more clarity to that whole international trade and those particular dairy products.
Yes, and there's also, there's a few things that are in the mix around dairy commodity derivatives. We've seen the Chicago Mercantile Exchange bring skim milk powder onto their market recently, and the NZX are looking at bringing on whole milk powder futures. So that will provide more price discovery for those sorts of markets, which is a good thing.
Well, thanks very much for that, James. Next up is Waikato Management School's Associate Professor of Finance, Stuart Locke, who joins our panel to discuss the business headlines making the rounds. Welcome back. Well, Stuart, let's kick this chat off with a look at Europe from your perspective. We've had more jitters in the markets, with Hungary sending signals that they could be heading in the same direction as Greece, although I think the powers that be pulled back on that and said, hey, don't panic. And their economy is fundamentally much sounder than Greece's, isn't it?
Yeah, I think in terms of proportion of debt to GDP, it's not as large, and a major difference was that Greece just did not disclose the level of indebtedness, and so it caught everybody unprepared. And then we had the quite protracted negotiations to get that $110 billion package in, with Greece agreeing to quite stringent budget cuts over the next 3 years, and that sort of shored Greece up for 3 years. Hungary, Portugal, Spain, they're now, I think, in that umbrella of the $750 billion, which was announced.
So
on
they
the
can
weekend.
take some comfort from that, as did Greece.
Yeah, I think it's going to give some comfort, but the budget cuts are still going to have to occur in those countries.
Well, it's going to be interesting to see if they have the political will, those governments, to actually really slap on the austerity measures, isn't it?
Indeed it is.
No politician likes having to do it.
Well, Spain with a 20.1% unemployment rate.
Unbelievable.
Where does this go as things start to tighten up? So I think we can expect a considerable amount of unrest. And it's not curing the problem. All it's done is bought them 3 years. It's got to be funded, and that's going to have real implications for us.
How does all that turmoil in Europe affect our ability to borrow?
Right. Well, the way I see it, the turmoil in Europe affects the sovereign risk of those countries. And we may even get situations where corporates in some of those countries will be trading fixed interest securities at a discount on the sovereign risk of the country itself, because they'll have AAA and diversified, where the country will be popped up with IMF funds. So how does that impact on the sovereign risk of New Zealand? Well, it shouldn't impact on us initially.